Hello, good afternoon and welcome to the live trading hour brought to you by the Live Trade Room, where we look for high probability trading opportunities across some of the world's largest markets. So we don't just focus on foreign exchange, we also look at commodity markets like gold and oil, and also your indice markets. So without further ado then, obviously if you are genuinely interested in learning how to trade these financial markets from a position of, I suppose, knowledge and understanding, and being able to position yourself with a high degree of a discipline in your approach, with discipline with regards to your capital more specifically, so we've got a really strong focus on risk management, then we can certainly help you if you just go to our website, thelivetraderoom.com, for more information there. We'd be delighted to help you if we possibly can. The title I noticed on this webinar is "Good Moves Are in the Pipeline." Yes, there is, and I'm going to explain quickly why and why we're of that opinion. So before I do, if I could just start with our risk warning. We had an issue actually broadcasting this webinar on Friday, because we had non-farm payroll, which our intention was to actually broadcast during that event. So we traded the event, obviously, because of our traders offline and stuff. But it was a shame that we weren't able to broadcast. So apologies if you were expecting us to broadcast. So there's our risk warning. It's prudent for every trader really to be... good afternoon, David. I hope you're keeping well. You've been on a break, but still getting trades in on the EU long from about 7:30 today. I think the euro dollar's pushing lower. Let me have a look off screen. Yeah, it's been... how are you getting on with those buy trades? We'll get into it in a minute. We'll have a look. We'll have a look for you, and we'll work it all out. But of course, it is prudent for every trader to be mindful of the news flow, just to see if there's any major news events that are likely to impact our trading decisions. Anyone trading the European Open, you just be mindful that we've had economic sentiment and both came in less than expected. So when you talk about economic sentiment, the more excited people are, the more enthusiasm people have about the economy, the more likely they are to go out and get a job, spend large portions of their disposable income. They're not fear-driven and anxious. They're kind of a little bit more free-flowing, and that's really what governments and economies are aiming to do. But of course, the sentiment across Europe is not perhaps quite as positive as it is perhaps in the US. So Europe is still playing catch up with the rollout of the vaccine. So that's probably playing into these sentiment figures. So not quite as per expectations, which again you'd expect that to have a bit more of a negative impact across the euro and perhaps more the euro dollar. But when we look at the price action really over the last few hours, there's been very little volatility in either direction. So it hasn't really, it's just been grinding lower pretty much. But it looks like we could be running into a bit of a level of support around these current levels. So we'll get into the euro in a second, because I know it is strengthening against the yen and the pound, if I'm not mistaken, or it was a little while ago anyway. So we'll get into those in just a moment. With a 10-point stop loss. Or 10 pips stop loss, yeah. So look, we'll have a look at that in just a second, David. As you can see, not an awful lot for us to deal with. One of the markets that are kind of surprising traders is the bond markets. So very, very subdued. The central banks have done a fantastic job in sort of quelling the anxieties across some of the stock markets, with the expectation for more support for longer, and that seems to be the kind of the it seems to be what traders and investors are increasingly looking to adopt, that kind of bias. So we are seeing the bond yields squeeze lower, and we're seeing quite a nice environment now potentially for stocks to start pushing higher. Okay, so let's get into these charts then. We'll see what opportunities we have. So in our trade plan session yesterday evening, we were really the only real trades that we were able to work with were largely the yen pairs, the euro yen and the pound yen. There's just arguments to suggest we perhaps will see a little bit of an uptick in the yen pairs. Let me move this out of the way. So we're looking at a few other markets, and one in particular is the S&P 500. So if I just get up my pen, you can see we're very, very close to all-time highs, and in fact, I think technically today's high is probably the third highest in history, if I'm not mistaken. So this is the out-and-out high here, which is the 42.46, the 42.41, and the 42.38. So we've really got the third highest price in today's trading in the S&P. So these levels just above this current price are likely to provide resistance, but we are sort of quite anxious to see, what the other indice markets are doing, and there is this impulsive move to the upside, as you can see. The Nasdaq is benefiting more so than perhaps the Dow Jones. And this is bearing in mind, there's been a lot of developments regarding, this corporate tax rate, sort of a global agenda to increase revenue through taxation. So just trying to standardize corporate tax rate around the 15% mark, and the US are certainly trying to to get buy-in globally. So we'll see how that plays out. So we're seeing a positive S&P 500. The Nasdaq is driven by a lot of your tech firms. So we're seeing this basket, squeeze to the upside, and is looking probably a little bit more positive. And now the Dow Jones is taking a little bit of a breather, and unfortunately we're seeing an awful lot of this type of sideways moving price action. So we do have mild bullish stock markets. You can see that the outperformer really is probably the Nasdaq across all of these markets. We're running into lots of resistance up at these highs across markets like the S&P. So we can say that we are in a relatively mild risk on market condition, which means we can probably look for some opportunities with regards to dollar weakness. So in fact, David, I just noting that you are looking for a buy trade. We too would be looking for a buy trade. The only problem is with today's price action is it's bearish, and it's pushing lower. What I can show you on the smaller time frames is a clearly defined floor being created in these markets. Let's see the best way to just keep a close eye on these markets. So, and let me take the more recent high as well. So if we zoom in, I mean the overall trend is very much to the upside. So if we just zoom out on the daily time frame, for example, we're moving from bottom left to top right almost over the last 12 months. So we had a bit of a pause. We've subsequently broken to the upside now. So looking for a buying opportunity is kind of within the broader parameters. So we can expect this market to potentially, our bias would certainly be to the upside. Something to just be mindful of is what we saw last week, and this is creating a bit of an issue for these markets, where we actually were able to see prices close below this level and continue further to the downside fairly briefly before we get the little rollover back to the upside. So we had a large number of what are referred to as false breakouts in last week's markets. So those are never great for us, certainly with the way that we trade these financial markets. So we saw a number of markets look to break out, and they failed to kind of hold those levels of support and resistance before reversing. So what it often means is you just end up being a little bit more patient and not be jumping into so many trades at the moment. So there's an argument to suggest that if we look at the more recent price action, that this price action here 4 days ago is probably the most telling bit of price action within the last 3 weeks. And what we've seen is nothing but a bit of a pullback, basically implying that we might get these prices pushing down to these lower levels in the not too distant future. So that's kind of the technical side of things, and certainly today's sentiment figures could put a bit more pressure. But if we look at today's price action on the daily time frame, we can see prices, we've sold off, we've made a low, and it looks like we've sort of retraced at 50% of this move. So again, looking at it on the 15-minute time frame, we'll zoom in. There's an argument to suggest if prices are able to break above this level, then you've got a clearly defined, we'd regard it as a bit of a pullback. And when you get this accelerated move, you get a little bit of a pullback, you make new highs, and most importantly, you make new lows. So there is on a 15-minute time frame, there's a bullish aspect to this market. So I can absolutely understand, David, why you're looking for a buy trade. You've got a natural stop loss
Business Insider saying the German Health Minister Spahn and the EMA do not see CureVac okay before August.
Okay, we're just going to get these market updates. So this is your take profit. Number one would be up here at the 2200. I don't know what you have in mind in terms of taking profit. I mean, I appreciate you're working with quite a small stop loss, but we'd expect prices to, if we can break out of this little range in here, in and around the 2183, then we can see probably a 20 pip move to the upside, potentially something around that. So you might get a profitable risk-reward trade-off. But you can see the nature of this price action. You'd have to be quite patient. We've been doing nothing now for 5 hours really. It's just constantly like this, so it's a bit painful to sit through this, but we are seeing lower highs, and we're seeing higher highs as well. Higher lows and higher highs, should I say. So there's nothing to suggest a nice breakout above this level. We'd see a nice little impulsive move to the upside. So that's the euro dollar. Elsewhere we've got a large number of these markets, and this is the prevailing market condition when we talk about, knowing the market condition in these markets. And for a large number of them, they are doing nothing but moving sideways. So it just makes trading more difficult when prices are very much range bound like this. They're great for scalpers and those that want to sell these highs. That's not kind of our style. That's not what we look to do. We don't look to, we've got positive risk reward targets that we look for. So when we risk, let's say 1%, we're looking for 3, 4, 5% in return, not risk 1% to get 0.5 back with a bit of a reversal. You have to be a lot more active to be profitable over situations like that. And these markets, what they're saying to us is, we're very likely, and this is the reason why the title of this broadcast is "Good Moves Are in the Pipeline," because all trends start from consolidation, and if we can identify this price action as consolidation, what we would like to do is to get in very early to another trend market. We don't mind whether it'll push higher or push lower. That doesn't matter an awful lot. Might be more longevity to one side over another, but principally the current market conditions are sideways, and we're looking for the breakout and the confirmation of this market to the upside or to the downside, and when we can make some trading decisions accordingly. So and we can see this across many of these markets. One of the reasons why we're looking for potentially a little bit of yen weakness once more is largely due to the potential for a bit of a push to the upside. When this market comes back to these levels, you're in this little sort of mini uptrend. We're back at those levels again, so looking at the dollar yen for this market to push higher could be a viable trade for us. So we'll have a look at across the yen pairs. The euro yen's in the same position, although there's a distinct lack of volatility in today's markets. There's no kind of getting away from that. So we'll have a look at the yen pairs for sure. The dollar's certainly selling off against certain markets, like since Friday's reversal. Thursday we had really strong ADP numbers, prices pushed higher. On Friday we had relatively poor non-farm payroll numbers, so prices started to reverse and continue to reverse very much into this little trading zone just in here. So we have to take that into consideration. A strong breakout to the downside is very much a viable trade. This market is moving to the downside, as you can see. So, and again, we're doing our analysis on daily timeframes. So if you're looking for a sell trade, then you can look to get that into that opportunity on much smaller timeframes as a result. So here's a strong level of support and resistance when prices are above it. You can look for the buying trade, and when prices pull back, you can look for the sell trade. So actually, this is your pullback opportunity in here in the early hours of, was it before the European session? I think this was. Yeah, so it was just pre-European Open. But looking like it's going to accelerate further to the downside. And it's not that you need to be careful, it's just that when you're trading consolidation, it does make some trading decisions a little bit more difficult. We're still in the dollar CAD sell trade. There's our so our stop loss is just above this little high just in here. We are looking and expecting kind of rollover price action. We're just needing to be really quite patient with it. The Aussie, I feel like a little bit of a broken record, but this market is largely doing nothing but moving sideways. Again, the breakout, and we very nearly got that breakout to the downside last week, but then subsequently reversed. So we weren't able to pull a trigger last week either. And the problem is with the sell last week, the positive news on the Thursday, which was the ADP news event, the dollar strengthened quite significantly. And the problem with not jumping in on the Thursday is just down to the fact that we have non-farm payroll on the Friday. So you can imagine if we jumped into these markets across the board for the dollar strength. Now we were looking for opportunities for continuation, but we didn't get into any trades prior to non-farm payroll. The numbers came in all a bit wishy-washy, and actually we had a less than expected non-farm payroll number, so it was always likely to impact the dollar negatively. So we're not really surprised to see strong reversals of Thursday's price action, and we saw a little bit of continuation yesterday across the board. But we're talking about consolidated markets, so all we've done is reverse back into consolidation. So that makes it a little bit more annoying. You just got to be patient, really. That's generally the key. It'd be very easy to get into 2, 3, 4 trades maybe, and either wait around a long time for them or them, reversing on you and things like that. So we sort of have almost a traffic light approach to markets. Sometimes they're green light when it's just be aggressive, load up, scale in, mitigate risk really, really sharply, look for really good, strong multiples of your risk in terms of returns, and start focusing on the next opportunity. And then there's other conditions which are a little bit more sort of amber, a little bit more mixed, cautious, and then occasionally there is red light type situations in markets which are there's such a lack of direction, lack of volume, lack of momentum, that you're left sort of needing to be a little bit patient, really. And that's why those are the skills that we focus on a little bit more, in terms of, are you being consistent in what you're doing? Or are you trying to adapt to whatever market conditions? So like, are you a swing trader that is now converted into a scalper? You just got to sort of work out what sort of trader you are, how much capital you have available, how much time you have available, and try and fit the best kind of approach to you as an individual trader. And that's what all the best traders do. They look for very specific setups. They have very specific ideas about what they want to buy and sell, and they have triggers to get in and triggers to get out, and sometimes the market conditions, they don't really fit your approach. So instead of us chopping and changing our approach all the time, we are very comfortable allowing the markets to just play themselves out, and then once we get the actual breakout trades kick in, then we are in a much better position, and we can be a little bit more aggressive during more positive market conditions. So hope that makes a little bit of sense. We've got a bit of a question mark over the markets like the pound yen. Bit of a question mark at these prices, so we need to see something a little bit more positive and encouraging. The euro yen has I suppose a marginally better outlook, so we'd push to the upside. And now what this is doing is pulling back to previous support. So we know that there's a level of support and resistance in this price, and that's now where we find ourselves for the trading session, with potential for this market to push higher. So the euro yen could be a really viable trade for the session. There is kind of a worrying lack of volume, but we are now entering the US trading session, so we might see an injection of capital in these markets. We hope we do. Last week we got a few late day moves. Excuse me. The S&P. So let's have a look at the quality of this move. So looking at the smaller time frames, so we can identify this level here as broadly speaking, a fairly decent level of resistance, and then it becomes support. So price has edged back to this level on two occasions. This level in here and this level back here. So didn't quite come back and settle, but touched back and then kind of clearly reversed. So we have this high in here. So markets are pushing high. We have that double bottom, which is sort of horrible price action really, but potentially we've got an opportunity to the upside in the Nasdaq trade. So we'll see how we get on with that. You see, it actually becomes a question of how much confidence do we have in risk on market conditions, and the answer to that question really is we have a mild bias to the upside, but it's not jumping out at us. It's not we wonder, like, we're in sideways moving market conditions. You wonder how long that will maintain itself for. You need to be really quite precise and accurate with what you're doing in these markets, with a strong emphasis on risk management and not allowing these trades to move away from you. Bitcoin, it's got an interesting little decision to make. So around this 33,000 level and then lower at the 29,000 level. These are strong technical levels in this market. I mean, nothing but air below this level. there's your structural failure trade. So that would mean, you know, prices could hedge much lower very, very quickly. Especially you've got to ask yourself the psychology of those traders that have been in from a very early stage. Do they look at this price action and suggest that actually this is a strong level of potential support, and if prices break through that level, are we exposing more and more capital to the downside, and are we likely to see a run in this market? Above this $29,000 level, there's still potential support to the upside. So we almost want to see the outcome before we, see if prices can break the levels before we can probably commit to the downside or to the upside for that matter. But we continue to obviously just monitor Bitcoin. So unfortunately for this trading session, all we're left with is just a few almost poor quality trading opportunities. It's not fantastic. Just that euro dollar, potentially prices can push higher. You look at it on a daily time frame, it's actually a selling candlestick. And one of the things that we recommend traders to do is to buy a bullish daily candlestick and to sell. I mean, trading is a little bit more nuanced than that, and there is situations, of course, where you can sell a bullish candlestick and you can buy a bearish one. But broadly speaking, and it keeps you on the right side of the flow of capital, look to sell a selling candlestick and look to buy a green one. So like yesterday, for example, there's an argument to suggest that, prices will tick up, continue to tick to the upside, certainly on the open and things like that. So that's how you can justify it. So the euro yen bearish candlestick, we might actually see more downside pressure put on the trade and on the market. With the euro yen, we'd like to get in again, just purely from a discipline perspective.
So Bank of Japan Deputy Governor says the Bank of Japan won't hesitate to take additional easing steps if needed, and that the bank will extend September deadline for pandemic relief program if judged necessary.
Okay, so all the central banks are really happy and comfortable doing what they feel is necessary in these markets, and that's pretty much being as supportive as they can for longer. So lower interest rates, continuing their bond buying program. The US alone are expanding their balance sheet by 120 billion a month. So, we are talking about enormous numbers. You see the risk on market condition, actually, David, I don't know if you're still with us, but is we're likely to see the euro dollar to squeeze higher, and sometimes these are the correlations that we want to get on side with when we trade, and they're not really there just yet. Not really there yet. You see, David would be. See, we're currently in a bit of a pullback pattern, but if this market squeezes 10, 12 pips lower, then we'd be definitely on to the downside. Okay, so some equity strength. There's kind of a lack of. These trades are not screaming out at us to be getting into it, so I wonder if it could be just one of these trading days that are a little bit meandering, a little bit of sideways price action. There's very little sort of market drivers, there's very little catalysts for these markets. That's another problem. I'm sure that's fine for markets like for players like the Fed and the Treasury. They're probably quite happy with these markets the way that they are. It's the volatility that concerns them. So what we might do, guys, is we might let you go. Like, we can look at these markets, the S&P to the upside, the Nasdaq to the upside, potentially the Euro Yen to the upside, and the Euro Dollar is. You see, there's an argument to suggest if we're in risk on, then we'll see capital come out of the dollar and we'll see the Euro Dollar actually squeeze further higher. So they are in keeping with one another, all potentially to the upside, and then that very well may end up dragging the Euro Yen to the upside as well. Okay, so let me put these levels up here, and you can perhaps take those away. Okay, let's see if 2184. So is it a breakout? It's more of a pullback trade, isn't it? So let's relabel this. So uh, 2184. Okay. So we got a high probability pullback buy trade above that 2184. So it's a breakout of this little level just sitting in here, and there's your pullback. Oops. So this one's slightly easier. What I'll do is I'll remove this level just sitting in here. So looking for a breakout buy trade above 133.34. Excuse me. 33 level. So that will be a breakout buy trade. If prices can get through that level, at the moment obviously they're kind of consolidating, not doing too much. So they're the euro pairs to the upside. So 42.38. See, what's a bit of a problem here is that we've seen a little rollover to the downside, followed by a really strong rejection, and then that type of move to the upside. So we're kind of in this little zone, broadly speaking, with a slight bias to the upside. It's just, this was like a false breakout trade, just clearing out the market down at these lows before it kind of gathered the volatility to actually start squeezing prices in the other direction. So $42.38. They're viable opportunities. How excited are we for them to continue higher? Not hugely. Yeah, 42.38. Got the monthly high just above it. Okay, so the 42.40. So that's above the monthly high. The 42.40 level. Let's have a quick look. High probability buy trade above the 42.40 level. 42.40. Stick that up there like that. Okay. The Nasdaq is probably the biggest winner in these markets, like literally across the board. We're not necessarily seeing the correlations, but we're seeing the appetite for this market to be pushing higher again.
It's moving into 5 minutes now until we get US international trade in dollar terms for April. Looking for an estimate of a deficit of 69 billion on a prior deficit of 74.4 billion. The range of deficit of 76.2 to a deficit of 67.5 billion. We'll also get the Canadian trade balance in Canadian dollar terms for April. Looking for an estimate of a deficit of 700 million on a prior deficit of 1.14 billion.
Okay, so we've got a bit of news coming out in just a moment, and what I'll do is, if I just amend this level just sitting in here, give me just a couple of seconds. Okay, so So we got this technical opportunity to the upside. Okay, so look, we'll leave these prices up there. They are probably the more interesting markets out there in terms of opportunity are concerned. Not really seeing a huge amount elsewhere today. Maybe there's a little bit of digesting of the employment situation in the US still to be played out, and to see if the dollar can start correlating with the stock markets again. So look, we'll end it there if that's okay. Limited kind of opportunities. You can have a look at the Nasdaq perhaps if you're eager to get into a trade. We are probably going to err on the side of caution and just get market conditions that are a little bit easier to work with. But nonetheless, they are sort of technically viable opportunities, but just not fantastic ones if you trade a.
We're just under 1 minute now till we get this US trade balance for April. We're looking for a deficit of 68.7 billion.
So if you trade a specific trade idea where you do get those opportunities across multi-asset classes, we like to see those. Bit of a sort of a choppy market condition at the moment. Yeah, your EU long trade, absolutely, David, is still grinding higher. Yeah, and above that 21.84, so another couple of pips higher. You would expect prices to be pushing up to the 122. So since you're in it, worth hanging on to it. At least you've got a clearly defined stop loss. I don't know where your stop loss is, but you've got this little technical level in here at a 21.63. So maybe a 20 odd pip stop loss in the trade. Oh, I think you said 10 pips, so you're probably working with a
68.9 billion for the US trade balance, a deficit of 68.9 billion.
Look, you're still grinding higher as long as it's grinding higher.
A surplus of 590 million.
Okay, that's good for our
Looking into the breakdowns, US-China's April trade deficit
dollar CAD trade.
25.83 billion versus a March deficit of 27.69 billion.
So a bit of appetite
potentially. Looking at the breakdown, Canada's April exports fall 1% month on month, with imports falling 4.7% month on month.
Okay, we're just getting a new leg lower on our dollar CAD trade. So if we break these lows down here, we'd be able to bring our stop loss right down, very close to break even. Perhaps the 120.93 Yeah, maybe the 120-100 is probably this level in here, 120-105. But we do need to see these prices break to the downside. They just kind of reversed last week and just drifted sideways. And now it looks like we're getting a little bit of an impulsive move lower, but it's nothing to be too excited about just yet. All right then, so look, I'll let you guys go. Thanks for joining us. We'll be back again tomorrow. Hopefully we'll have, I guess, more coherent market conditions to potentially work with tomorrow. So on that note, thanks for joining us. Feel free to subscribe to our channel. We'll be posting some lots of like little market update videos and things like that, so you'll be notified when those go through. And also we let you know if you click the bell function, we'll let you know when we are live, and you'll be notified straight away. And hopefully you can join us online and engage as well. So let's see how we get on. Strange market conditions today. Sometimes it's just a case of, be patient. Don't be too aggressive. It looks like if you get into a trade, you're going to have to give it a little bit of time and space to kind of work its way out. So for us, we'll probably wait for slightly better market conditions where you can create a trade idea and look to stack the odds in our favor in a little bit more than what we can currently do right now. Okay, so look, thanks very much. On that note, we'll be back again tomorrow at 12:30. From everyone here at the Live Trade Room, take care. We'll speak to you soon. Bye for now.